Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. Now in today's video, I'm going to be looking at the continuation of the pattern that we've been looking at on the weekly chart, and that's the Hikake pattern that's been developing over here. And we'll have a look at exactly where we are and where it is likely to be heading in the next few weeks. And on the daily chart, I'll be looking at the inverse head and shoulders, which everybody seems to have missed over here. And we'll have a look at the possible targets from this neckline over here and why we're just about breaking out of that and where this is about to go. If I've got time at the end, I'll run through the time frames with the different moving averages to give us some indication as to when the reversal could take place and how. So if that sounds interesting, then grab yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember all my videos are just for educational purposes. Please make sure you do your wider research before you make any investment decisions. So the title of the video is all about targets, the short-term targets and the medium-term targets, and I'm going to be having a look at that in the context of various different charts. I'm going to start off on the weekly chart here, and we mustn't forget or overlook the actual trend here. So we're in this long-term downward channel over the last 12 months from the 69,000 top here. We found support over here, resistance over here, and then down here we've had all this support. And within this downward sloping channel here, we've got another resistance point that's actually been developed over the last 6 months, with the resistance points being at the $25,000 mark here. Then we got rejected on a lower high at 22,800, and then we've just got rejected in the last few weeks here at 20,800. So this downward sloping trend line over here is going to prove very, very strong when we move back up here at any point. So that's the background, that's the context of exactly where we are with this particular pattern that's developing over here called the Hikake pattern, which I've been talking about in the last 2 videos, and it seems to be playing out. So I'm going to be looking at this much more closely now. Please remember, all these levels that I talk about, these are all to do with probabilities. Some have a higher degree of probability, some have a lower degree of probability. I know that watching many YouTube videos, most of the people presenting on those seem to give the impression that they know exactly where the market is going, to the upside or the downside. But I can tell you that nobody knows exactly where this market is going. And all we have is the charts to give us an indication to increase or decrease the probability of where it possibly could be going. So the whole thing is all about probabilities, and we're going to look at those probabilities based on the chart developments that we've got here. So looking at this Hikake pattern, so as I mentioned before in the last few videos, that this pattern called the Hikake pattern is actually a 4 to 6 candle pattern development. And we've had the first 3, which basically conduct the price movements in the following 3 candles. So here we've got this solid red candle over here, which brought the market down, which was the FTX candle. And that became the inside bar candle to this next candle over here, which was followed by, as part of the Hikake pattern, a lower high and a lower low. So that was the 3 candle pattern. And then what we have to see in the next 3 candles is a break above this candle here, which, as I said in the last couple of videos, was at 17,170. And this candle here closed last night. So this was the weekly candle, and that closed at 17,108. So far, the first weekly candle after the 3 candle setup here hasn't broken this level at the 17,170 level yet. However, if you look at the current candle, and we're only on Monday at the moment, so this seems to be wanting to go higher. So this could very well break above that, and then that should give us a run up to the upside. Firstly to the 18,200 level, which is at the bottom of these candles here. And then the next level would be to this trend line, which could be anywhere around 19,800 to 20,000, anywhere around here. And that's at the tops and the bottoms of this support and resistance over here. Remember, this is a short-term pattern, so this could play out over the next 2 to 5 weeks overall. So we'll just have to wait and see. So keep an eye on this development. It's working out very, very well according to the Hikake pattern and its characteristics. But as you can see, there's a huge amount of resistance for it to get through. First this level here, and then the downward sloping trend line. And if it gets past that, then there's this red line that I've just shown you, which is a longer term trend line. So we've got a lot of things to get through. And the probability is that at any of these 3 points, it's going to get rejected, unfortunately. So in the short term, we may be having a relief rally to these levels, but in the medium term, it looks to me as though we're going to get rejected and possibly have another leg lower below this 15,400. Only time will tell. And over the last 2 videos, I've been showing you on the daily chart that we have a divergence here, a bullish divergence, where we've made a higher low on the RSI and a lower low on the price, which should give us an increase in the price over here. So that's exactly what's been happening. But a lot of people have missed out on this pattern which developed in that period. And that is that we've got an inverse head and shoulders pattern developing here with this neckline. And as you can see, we've now broken out, retested it a few times, and now seem to be breaking out above it. And the target on this inverse head and shoulders pattern is basically from the bottom of this head here, when it came down at 15.4, to the actual neckline over here. That gives you around about 9.2%. So if we measure 9.2% from this level here, that takes us to exactly 18,400. So this 18,200 level, which is a very strong resistance point, seems to be where this head and shoulders seem to be heading here. So this seems to be a very likely point of rejection over here, while we're having this Hikake pattern playing out, as well as the inverse head and shoulders pattern playing out. There is a chance that if we do flip this level over, we may well get up to this next level, this trend line that I've been showing you. And that could be around about the 19,800 level here. And the possibility is that we could even run further up to that very strong red trend line that we've had over the last 12 months. But we'll wait and see. The higher probabilities are obviously at these 2 levels here. So if we have a look at the overall bigger picture within the context of what we've just shown you here, the problem I've got with this chart is that we're on a very strong downward pressure in this very strong dominant downtrend that we've had. And why I think with a higher degree of probability that we have one more leg down to a lower level at least. And that is that if you take the all-time previous high from December 2017 of 20,000 here, we can see quite clearly that we've actually broken through that now here. And it didn't seem to have a very big bounce back up towards it, which shows you a very weak trend, which seems to want to go lower rather than higher. Yes, in the short term, we're having this Hikake pattern playing out, which seems to be wanting to retest the underside of this resistance point around the 19.5, 20,000 level, or even lower at 18,200. But when you look at the chart this way, you can see that there isn't really any support levels here, or even here, until you get to this level with this cluster, this top here. So you're looking at this level as the next natural level for the price to move down to. And if we include this resistance point here and this cluster here, and this resistance point here, that brings the level from 10,000 all the way up to about 12,000 here. So this seems to be where, if you look at the chart on the weekly time frame, when you zoom out on here, it looks quite clear that if we don't make it above the 18,200 here, then this seems to be the likely destination at these points down here. So only time will tell, but we really have to be very realistic. We can't just have a bull market narrative because there isn't any real signs yet that gives us clarity that we've actually bottomed out. So we'll have a look at some of the moving averages on the different time frames to give us some sort of an idea of what we can look for to have a look at when this reversal can take place. So having a look at the monthly time frame, if we have a look at the 8 EMA, we can see quite clearly that over the last 2 cycles, this 8 EMA, the blue line here, has proven to be an incredibly strong support all the way on the upside. And once we break it, seems to confirm the downtrend or the bear market down here. And what we're really waiting for is a reversal back above the 8 EMA on the monthly chart. That's what we really need to see here. And currently, that level is at around about 22,800. So unless we can get above that, the downtrend seems to be continuing to the downside here. And we can see on the larger time frame of the BLX chart over the last 12 years, how this plays out. That once we have a bull market, it goes above the 8 EMA, comes back, and we have this bear market. Once we get above it, that's when the market seems to go back up again. And same here, when we topped out at the end of 2013, once we fell below it, that was the bear market. And then once we captured it again, at this point, at the end of 2015, that's where the bull market started. And similarly, as I've just shown you in the second cycle. So this is an incredibly important average to look out for. And that would really confirm, once we get above the 22,800 at current prices and where the current 8 EMA is, then that would confirm that we would be back on the reversal side. And if we have a look at the weekly time frames, the two main moving averages to look at on this time frame would be the 21 weekly simple moving average, which is the yellow line here, and the 200 weekly simple moving average, which is the green line over here. So over the years, we found very strong support at the 200 simple moving average here, and same over here. And this is what everybody was expecting, including myself, that we would find support at this level. And as I've been mentioning over the last few videos, this cycle seems to be very different to the previous cycles on many different levels. And one of them is that we've broken through this 200 simple moving average, used it as a resistance here, and then lost it down here. And this is unprecedented territory. We don't know where this is heading now. And we need to really recapture this 200 simple moving average on the weekly time frame, which here is at 24,000. And as you can see, once we do find support on it, then that is really a very strong signal that we're going to be moving to the upside. And on the daily chart, the two moving averages really to look out for is the 200 simple daily moving average, which is the green line here again. And then the white line is the 50 simple moving average. And as you can see, this was a pattern that we were looking at before that it seemed to be repeating over here from the 2018 market. And obviously, the fall that we've had with the FTX scandal has negated that pattern from over here. So instead of going above the 50 simple moving average and then moving higher, we got rejected just as we broke the 50 simple moving average over here. We got rejected on that FTX scandal. Whereas this is where we were. Up to this point, all this trend was actually playing out exactly over here. So obviously that invalidated that pattern, but the underlying principle is still the same, that we need to recapture the 50 simple moving average once again. And then as you can see with the green line, that after we topped out at 69,000 and fell below the 200 daily simple moving average over here, then we've used it once to actually find resistance at that point. And the strong rejection at that level, and we've never really come and actually retested it again, that tells you that this becomes now a critical line, this green line, 200 simple daily moving average, and that is currently at 21,400. So once we can recapture that, that is another very powerful signal that this downtrend has come to an end, and we're finally going back to the upside. So I hope you made some notes on that. These are the very critical moving averages on the various different time frames, on the monthly, the weekly, and the daily charts. And if there's anything you can take away from this video, that is what I want you to take away. Keep an eye and focus on those various moving averages. And once we get some signals, any one of them, once we actually recapture those moving averages, then you'll be ahead of the game, knowing that this market is now finally turning around. Okay, so we'll leave it there. I hope you found value in the video. And if you did, then please do remember to like and to subscribe and to turn on the notification bell. If you have any comments, questions, or suggestions, please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.